I'm Laura Heigl with Century 21 Sheets, and I'm with Jordan Richmond today. And hi.
How are you?
I'm well. So I had a situation recently with a deal that fell apart because of my buyer's credit score issues. What does credit score have to do with home buying, Jordan? And how does it impact it?
Yeah, that's a great question. Credit score is extremely important in the home buying process if you need a loan. That is probably the biggest thing I look at when I'm looking at a consumer's ability to afford a loan. We want to see that someone has had credit, has had loans, and has the ability and knowledge to pay it back. To answer your second question, how does it affect a loan? A good credit score, 740 or above, is going to get you offered the best interest rates. So it's going to make your mortgage a little bit cheaper. When you get down into the mid or low 600s, your interest rate's going to go up. And more importantly, if you have to pay private mortgage insurance, your credit score really affects that a lot. So at the end of the day, it's going to affect your payment if you can qualify for the loan. It's also going to affect whether or not you can qualify for a loan. On a conventional loan, you have to have at least a 620 credit score. On an FHA loan, we like to see above 580. There are some instances where you can go as low as 500, very few and far between though. And it's not going to be cheap at all. It's going to be very expensive.
So the way I understand it, and let's use $250,000 as a ballpark. I want to borrow $250,000.
Okay.
If I have a credit score of 600 versus a credit score of 700 or a credit score of 800, it costs me more money at 600 than at 800?
Absolutely. A, your interest rate's going to be a little higher at 600, so that's going to affect your payment. And then B, if you're putting less than 20% down and you're paying mortgage insurance, depending at 600, you're going to have to get an FHA loan, and your mortgage insurance is going to be higher than if you were at a 780 getting a conventional loan. Your mortgage insurance monthly is going to be almost twice as much.
This is super important, guys. I love showing people homes and helping them find their dream home. But if they don't have cash to buy a house, they've got to get a loan. And the first step in that process is to go get a pre-approval.
100%.
100%. They need to do that first to find out if they can even buy a home. And it wouldn't hurt to start doing some of this ahead, right, Jordan? Because if they came and saw you now, they thought they were a spring buyer, but they'd have some time. Is that correct?
You would be amazed how many people I pull their credit and they tell me, oh yeah, I got great credit. Call it 750. Their Capital One card is telling them 750. Your Capital One card's trying to sell you another credit card probably. So it's important to call your lender, and I will tell you what your actual score is. You'd be amazed how many people say, oh yeah, my credit's fine, and then we get into it and oh well, you've got a 600 credit score and you've got 3 collections that maybe you didn't know. Maybe it's you moved out of an apartment and forgot to pay a cable bill. It's a $4 collection. That's dinging your credit every month. Maybe you didn't, So yes, whether you're going to buy, if you think you're going to buy anytime soon, I would contact me sooner than later. I go over your credit with you. I let you know where it is. If it needs improvement, I can help you with that, whether it be advice or we do have some credit tools to help raise the score. But yes, if you're thinking about buying a home anytime soon, please call me.
That's cool. So first step, beyond looking at Zillow and Realtor.com, call Jordan. Thanks for watching us today.
Thanks.